Members of the business community are more dissatisfied with current trade conditions than in the previous quarter. That's according to the RMB BER, or the Bureau for Economic Research's Business Confidence Index. The measure slid 4 points to 38 in the fourth quarter from a previous quarter improvement of 42. Following improvements in the third quarter, the retail and motor trade sectors have backtracked as subdued household income growth further impacted on sales volumes and weakened profitability. Credit rating agencies have cited the country's low level of business confidence as a constraining factor on GDP growth. And joining us now to unpack this is RMB economist Isaah Mhlanga. Thank you so much for making the time to talk to us today. You survey 5 sectors,
yes,
right? And how many of them were more pessimistic this time?
Of course, it's 5 sectors, as you said, and we had retail sales, motor trade sales, and also trade sales also being a little bit more pessimistic relative to the third quarter. But I think it's what important to note is that overall business confidence remained in net negative territory at 38. What it simply means is that about 62% of respondents remain quite pessimistic.
What's weighing them down?
Of course, it's quite easy to understand if we look at what happened in the third quarter for business confidence to improve. We had inflation slowing down to about 5.9%. We also have petrol price cut and also the quite relatively peaceful local elections. Now all those factors have turned in exact opposite direction, where we now have inflation pushing up to 6.4%. Also the political environment has been quite tense, and also petrol price increases. So that would mean that business confidence would generally be much weaker than in the third quarter.
It was interesting that the building sector rather was the only one that sustained an increase in its confidence. What's happening in
Yes, the overall building confidence improved, but if you look into the details of that indices, you would realize that residential business confidence is the one that picked up quite nicely, while non-residential confidence remained quite muted. And you can see why the residential continue to improve. Of course, people are downgrading from bigger houses to smaller houses, staying in the houses much longer, which means they would spend on renovations and extensions. And that particular sector continues to see some improvement. Of course, if you also look at results from cash build, it tells exactly the same story.
Very, very interesting that. I think let's talk a little bit about the retail trade, and you talked a little bit about motor as well. That, I suppose, is an indication of the state of the consumer at the moment.
Of course. I mean, if you take into account that the Reserve Bank have increased interest rate by 200 basis points in this hiking cycle. Also, if inflation weighing on the consumer, third quarter unemployment numbers, the highest in 13 years. That's quite important to note, especially because it implies that income continue to fall, which exert a lot of pressure. And again, there is also new regulation which limits the ability of retailers to issue in-store credit applications. That also has weighed on confidence of retailers.
Bit of a concern looking at manufacturing. It seems to suggest an industry that's either in recession or very close to one.
Yeah, that's true. I mean, over the last 2 years, manufacturing has been battling, but I think manufacturing is a very diverse sector. Some are export-oriented, some are facing local consumer. And of course, if you face the local consumer, you are in the same scenario as the normal retailer. But if you're an exporting manufacturing company, it means conditions can be slightly better because of the weak currency. Of course, given also the relatively supportive external demand.
Okay. Well, when you look at this, 38 points on the BCI, any silver lining? Are we anywhere near the bottom?
Look, our sense is that we are close to the bottom. One of the factors which is quite a concern is the political environment, and we think next year that's likely to improve. Of course, with the new leadership of the ANC, we're likely to get much more clarity on the politics. And again, food price inflation has been quite pivotal in pushing inflation overall higher this year. Yeah. Next year, because of good rains, we are expecting food price inflation to moderate, and that's going to lift the sentiment of the consumer and also encourage the central bank to start cutting interest rates.
And the growth outlook?
Growth outlook remains very mild. I mean, we must understand that over the last 2 years, growth has been quite weak, and in particular being affected by agriculture due to drought, and that's going to pick up next year. So it's more of a cyclical rebound rather than an improvement in trend growth.